Hey guys, it's Andrew Keen from KeenOnTheMarket.com. This is your unusual option activity report for February 21st, 2012. I've been talking a lot in these videos that I've been scaling back on a lot of my trades. I've been taking profits off in a lot of trades, and I've not been trading as much as I used to. The reason is I want to take the highest profitable trades. The goal in my day is not to trade as much as possible. It's to make the most money I can. The end goal is to make money. We're not here to make friends. We just want to make money. So I've not been taking a lot of trades. But let's go over some of the trades today. Customer bought 20,000 KKR January 2013, 17 calls for 95 cents. Stock was trading 15.10. We'll talk about these. All these charts look very similar. We're topping out here and customers buying upside calls. Can we rip to the upside? Or are we going to reverse back down? This could be cheap gamma. I'll be talking this in the live trading room. When we are in the live trading room, I will not only be announcing the trades I'm putting on, the trades I'm not putting on, but I will give the reasons why I'm not putting on certain trades. This will distinguish us from other chat and trading rooms. I look at every single trade as a possible trade, a possible way to make money. And my goal, like I talked about, is to make money. So I passed on a lot of these trades, and I'll explain why. Do I think KKR is going to get up to $17? Well, it's possible. If we look at the weekly, it did get up to $17 in 2011. However, in my opinion, this is cheap gamma. Volatility is very cheap. They're trying to buy gamma, and they're trying to sell stock against it, creating straddles. This will be talked about in the live trading room. Next trade, TEX. Terex Corporation. Customer bought the April 28 calls, 155 when the stock was trading 26.47. As I talk about, all these charts look a little very similar. This one actually looks a little bit stronger. This might have been a decent deal as the stock just climbs higher. I think this stock could get up to $28. However, I did not take this trade. I'm long a little bit of premium, and today it hurt me a little bit because the volatility just keeps going down. The more that we grind in that short, tight range, the less of the premium is worth. Next trade, TLM. When the stock was trading $13.90, customer bought the March 15 calls for a quarter, 2.1 times usual option activity. As we see, the stock has not traded $15 since October, and it barely hit $15 then. This could be another gamma play. They think maybe the stock's going to test back down here. Best way to get gamma when the stock's rallying is to buy calls and sell stock. That way you're creating cheap volatility. If you're buying puts up here, you're buying higher volatility. This will be all discussed in the live trading room. We're going to have a 5-day free trial. I promise if you guys get in and you will like it. If you don't like it, no worries. You can go be on your way. Go to a different room. We don't talk about any trades in hindsight. Everything is real time and live. Everything I trade is not in a sim account. It's a real dollar account. Stock was trading $3.54 in BZH. Customer sold the BZH May 3 puts for 32 cents. Basically, the customer saying, I'm willing to get long the stock at $2.68, which is right here, which it hasn't tested since the beginning of the year. I think this was a decent trade. I could have bought some gamma on the stock. Like I said, I'm long gamma, and it hurt me a little bit today because volatility is getting crushed. Last stock, CIE. We flagged this one a couple days ago when there was unusual option activity. We spiked higher. Customer sold the April 40 calls for $1.20. Stock was $31.40. So customers are willing to get short the stock at $40. And if we just keep going back, the weekly, the monthly, never traded $40. So in my opinion, this is not a guy who's trying to sell calls against his stock. He's taking a position saying, I'm willing to get short stock up there. One last one I want to look at is Dell. I did an earnings play on this. It sold off a little bit more than I expected, but we can look at this really quick. And I'll put in the 24 hours so we can see where it's trading. Anyways, Dell had earnings today. It's been very, very strong. If we look at the daily chart, it's been very strong. It's up 25% this year. However, I did not want to get long Dell up here. I could not rationalize getting long Dell in this huge run-up from the beginning of the year. The beginning of the year was trading about $15. But I wouldn't mind getting long Dell on a pullback. Maybe a pullback to $17.50, maybe a pullback to $17. I sold the April 17-16 put spread for 20 cents. I'm willing to get long Dell at $16.80. As long as Dell stays above $16.80 between now and April, I'm going to collect the 20 cents. If it goes under it, I will get long, and I'm stopped out at $16. I think Dell will move with the market. If the market moves higher, Dell will move higher. This was a good trade just for the reason that I wanted to be bullish, but I didn't want to get long at the top here. I talked about it on Bloomberg today that I didn't want to be buying the top. I don't want to be the last guy holding chips. But if we pull back, I'll be comfortable getting long. So the stock's trading around 17.40 right now. The put spread might appreciate a little bit in value, maybe 30, 35 cents. I will leave it on and say I'll be comfortable getting long Dell at 1680. Just like the stock market, I'm comfortable buying on dips. This is Andrew Keene from KeenOnTheMarket.com. Pretty soon we'll be having Trade of the Week, which will be a premium service that will be the highest profitable trades all week. Some days I don't even want to take the trade of the day, but I do it for you guys so you guys can learn and educate yourself better. Have a great night.